theme. He said, I moved out of my principal place of residence, which I'd been in for 6 years when my relationship broke down, and then rented it back to my ex-partner for 2 years. She now wants to move out, so I'm thinking about selling it. Will I have to pay capital gains tax, and is there a way to avoid it? So, yeah, continuing that conversation, what if that person you're renting to is an ex-partner who's also been, you know, somebody who's lived in the house long term?
Yeah, so this is coming down to a tax ruling, and so we're not tax experts on here, but what we will tell you is what are statements of fact. And statements of fact are, we have what's known as a 6-year rule. Now, that 6-year rule will allow you to leave your principal place of residence, allow you to rent that property out, and then after that 6 years, a decision is made as to whether it is your principal home or it actually is going to be an investment property longer term. Now, in this particular case, in Michael's case, that 6 years has been up. He's been collecting rent, maybe negatively geared, positively geared, we don't know, but ultimately the value over that time period is capped as his principal place of residence. The following 2 years, so if we get a valuation on that 6 year and those remaining 2 years, you're looking to potentially have to pay a capital gain. So go and talk to your accountant about the situation and they will be able to give you a better outcome in terms of what that figure would be. But you can't have it all one way. You can't get the free rent and the negative gearing but not necessarily get caught at some type of tax position.
Yeah, absolutely. And look, the federal government's got a terrific capital gains calculation website, and that'll help Michael work through what the exclusions are. Certainly, as Ben has just said, if Michael has been in that dwelling for 2 of the past 5 years, and that's been Michael's permanent place of residency, it is most likely he will have an exemption in place. The other thing that we're unaware of Michael's situation, but his partner's name may be on title, and they could be joint tenants in common. And in that respect, well, they are exempt. So our advice in this one, Sophie, is to get some really competent tax advice. Michael should be talking to his accountant and seeking professional advice on this one.
Absolutely. All right, we'll move on now. This next one is, does land size matter on units from a capital growth point of view? The benefit of houses on big blocks of land that can be used for multiple purposes and home buyers and developers. However, what about units? You can't really do anything significant on the land, such as knock down and rebuild. So does the land size matter when you're buying a unit? Ben, do you want to start with that one?
Yeah, it absolutely does. It's called land to asset ratio. So if I had 8 units on one block, I own 1/8 of that land mass. If I had 60 units on a block, I've got 1/60th of that land mass. So over the long period of time, it's the land value that appreciates, and it's the improvements, i.e. the buildings on top of it, that depreciate. So I'd much prefer to have still a good land content, and that's why you'll always see, you know, properties, units where you've got townhouses, courtyards and those types of things as part of that land conversation, because ultimately it's still going to come down to owner-occupier appeal, and I still want to be, you know, only with say 7 other neighbours as opposed to 59 other neighbours. So land size does matter when it comes to units as well.
Do you think that's a forgotten asset that people probably look over sometimes, Peter?
Yeah, we completely agree with what Ben has just said. Land size absolutely does matter, and we look at all the urbanisation that's going on around every single capital city, and what's to say that a 1/4 acre block in an inner metropolitan suburb with a freestanding house on it can't be turned into 8 different units, you know, with fantastic value attached to it. So land size absolutely does matter.
Right, moving on. This one is in Paddington. This is about heritage issues. It says, I'm interested in buying a heritage listed character home as an investment property in Paddington. Do you think that's a risky move? I think I'll still get plenty of capital growth, and that's from John, who's in Paddington. Yeah, I think Paddington in Sydney, you're not really going to go wrong. If you can afford to buy into a heritage home, you should probably get it and hang on to it. Yeah,
look, I think, Sophie, what we're talking about there is scarcity, and we love this owner-occupier appeal. I mean, owner-occupiers buy with their hearts, they buy on emotion, that pushes the value higher. So the only caveat on this one would be if it is a very tight, narrow terrace, as an example that we get in Paddington, and the livability of the actual property is then at question. because ultimately it's going to be very difficult to be able to get approvals through to be able to change that heritage around what it looks like. So you've got to still have that livability, but if I look at Paddington all up, I mean, it's very hard not to go over it. Still, don't pay overs. I mean, let's wait for the right time to buy into that market. But I absolutely believe that on the whole, Paddington is always a blue chip market, but I would just want to make sure that I can do enough to that property to bring it into what I would call livability for today's owner or tenant in that property.
Yeah, Peter, he has said he wants it as an investment property,
Yeah.
so you imagine he wants to put a tenant in there. Is it a risk having a tenant in a heritage property? Could they accidentally damage it in ways that could then fall back on the owner?
Well, I'd look at the area first. Paddington is an outstanding growth area. So one thing to consider for John is that whilst the median price of a house in Paddington is high, it's $2.25 million. It's got a 10% annual growth rate. So that is fantastic. Anyone would be delighted with that. But the high price has got a low rental yield. The yield on rents in Paddington is only 2.4%. So it's a significant capital outlay for a low annual return in terms of his yield from his rent. But if he's buying it to hold as an investment property, if he can continue to sustain the quality of the property over the long run, I think Paddington is, like most inner city Sydney suburbs, an absolute no-brainer. Buy it, invest in it, make sure it is well maintained and maintained to the right standards that that the council says for the heritage quality of the property, but absolutely go for it.